Now that this market's being flooded with new IPOs, I think we're worth looking at how these newly public stocks tend to behave. Typically, the bankers only sell a small sliver of stock in the actual deal, which props up the price right out of the gate. But when the lockup period expires after 6 months and insiders are allowed to sell their shares, stocks tend to get crushed, which is why this Coupa software is so interesting to me. Coupa is a cloud-based software company with a platform that helps businesses manage their spending decisions, find more cost savings. Now, this company came public back in October at $18 a share, spiked much higher on its first day of trading, opening at $35 before coming down to close just over $33 a share. As time went on, the stock got pummeled and went back down to the low 20s, particularly last month as investors started to worry about what might happen when the lockup expires. Sure enough, Coupa Software conducted a major secondary offering yesterday, selling 4.4 million shares on behalf of existing shareholders. Something funny happened, though, after the deal price at $25.25. Once we got past the so-called big bad event, the stock quickly surged up nearly 15% from the level where the secondary came, and now it's trading just under 29. So could this be a new beginning for Coupa, or did we simply witness a relief rally as the secondary ended up being far smaller than investors feared or thought? Let's check in with Rob Bernstein, the chairman and CEO of Coupa Software, to learn more about his company and its prospects. Mr. Bernstein, welcome to Mad Money. Good to see you, sir.
Thank you so much,
Have a seat. Thank you.
Good to see you as well.
Your company caught my eye when it came public, obviously, but then it caught my eye big time when I saw this secondary, and I said, wow, there's going to be 40 million shares. They're going to unload. Most people chose not to sell. How'd that happen?
I think they understand the size of this market opportunity. It's huge. I mean, you're familiar with Salesforce, I know.
Yes, I am.
This is a company that started with focusing on helping companies optimize the way they sell. We're on the other side of the equation. We help companies optimize the way they spend money. We're managing now hundreds of billions of dollars in spend for these companies, so we think we've got a big long-term opportunity here.
Now, I know you offer what we call a value as a service, and you want a marquee account that all our viewers know, Caterpillar. What value as a service do you offer Caterpillar?
Well, we offer them the opportunity to optimize all their business processes around spend, procurement, expense management, invoice processing, sourcing, supplier risk management. Right. Every which way to optimize the way the organization spends money and save.
Now, I think an Oracle or SAP would say, well, wait a second, why do you need that little guy? We can do that for you. What's your advantage over working with an Oracle?
Well, this is a huge market opportunity, so there's room for plenty of players, but we're the only ones that have a comprehensive cloud platform. We're the most usable platform. You need to have adoption in order to be able to save. We're an open network concept. We provide analytics across all of the companies that use our products, so each individual customer can get smarter and smarter about the way they spend, and we implement very, very quickly, so the time-to-value equation is exceptional.
Could that be one of the reasons is that you have a relationship with Amazon? This seems to be very good.
It is. Amazon's a customer, and we're hosted on Amazon as well. We're completely in the cloud, 100%.
Well, now, when I looked at the revenue growth, you have the actual accelerating revenue growth right now, right? I mean, don't you think that's got to be one of the reasons why your valuation is what it is? There are only a handful of companies that have accelerating revenue growth.
We have really good revenue growth, but what's even more interesting for us actually is the measurable value we're driving for each individual customer. These customers stay with us hopefully forever. We're thinking about how to drive value for them for many, many years in this once-in-a-lifetime transition from traditional software to the cloud.
You made a hire that seems like he's an interesting fellow, Mr. Millay, who can do federal work. The federal government's got a lot of fat in it, huh?
Oh, they sure do. So we want to go in there, and we want to help them optimize all their procurement processes. We work with commercial providers like BAE Systems and others that purchase a lot of material through our application set. We want to go and help the government optimize the way they spend.
Now, when they bring you in, the thing that was the gating factor, that's why I wanted to ask about Caterpillars, I did not know you until you came public. How do people hear about you?
We didn't spend as much money on marketing as a lot of other firms.
You're not. I mean, Salesforce, people know. Look, they have the big festival, and a lot of these companies have festivals. You guys are a little under the radar.
Well, we spent all of our energies on getting customers live, getting them measurable value, and then leveraging their referenceability to go into new markets in Europe, now in Latin America, Asia, and all across the United States.
Billings at 44% growth? That is the highest of any publicly traded company that I follow.
That's a pretty exciting opportunity.
So how's that? I remember when we spoke to Mr. Frank Slootman at ServiceNow. I said, how do you maintain it? How can you maintain that pace? That seems that it's not capable of being maintained.
We maintain it one customer at a time, and we think about our business by removing every variable to faster growth that may be stopping us. Is it not enough salespeople, not enough awareness, not enough systems integrators. Now we have thousands of people, folks certified in Coupa. Is it our technology development? Wherever the bottleneck is, we remove it so we could build the value as a service business to go faster and faster.
All right, last question, because I think people say, well, wait a second, they're not making money. The goal right now is to land, expand, and grow. It's not necessarily the goal to start showing a profit next quarter. That may not be the opportunity.
Well, we're in a really nice position from a cash flow scenario. We haven't burned a lot of money, and we've created a lot of recurring revenue. So we're going to do this very carefully and build into this market opportunity for years to come.
Well, I got to tell you, when I see a company that does a secondary and people, there's 40 million shares that don't go, that aren't sold, it tells me that the smart money is staying with Coupa Software. That's Rob Bernstein, the CEO of Coupa Software. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.